what is the immediate impact of what's going on with the yen? And is there a line in the sand, in your view, as to how low it can go and what the authorities there are actually comfortable with?
I think it's very difficult to tell where it will go, but what is clear is this level of yen to dollar, and also in the real effective exchange rate, it is almost 50 years low. So it's very negative, generally speaking, but I don't know to what extent it will be further depreciated, or because it can be overshooting, it can be coming back.
How do you see this impacting the economy? We just had the central bank governor Kuroda talking about how how low it could go now is actually posing a negative impact on the economy. Or do you think that this is the reflation that Japan has been waiting for?
Yeah, but this price increase, CPI increase, is based on the import price increase, which reflects higher oil and commodity prices, food prices, because of Ukraine and demand pickup. But also it reflects the yen's depreciation, which has impact on the imported prices. But what we should pursue is the wage increase and the CPI increase based on the increase of the wages and profit, the Japanese production. So it shouldn't be the imported price deflation. So I don't think this is good for the Japanese economy. Generally speaking, the currency of the country should be higher instead of lower, generally speaking. If it is very excessive, like 75 yen per dollar when I was Vice Minister of Finance, it is negative. But yen, the currency should be generally better to be stay at the higher level, to have a more purchasing power of countries, income level and asset. That should be appreciated or evaluated well by the market.
Nakao-san, there's a body of thought. You mentioned 75, of course, years ago when you were Vice Finance Minister. The thing is, does this price reflect the state of the Japanese economy in any way? Or maybe it's gone a bit too far, but what would be the right kind of level for the yen in your view?
Yeah, it's very difficult to tell what is the appropriate level of yen, but the 75 was too excessive movement, and also the level was too, the yen was too much. But so this time it reflects maybe balance of payments situations, including the trade difficulties, trade surplus coming down, and even sometimes the deficit, and also service trade, which is tourist service, is now not here because of the COVID, and people tend to keep the dividend income abroad. So it doesn't come back. So there are many elements of BP, and also, of course, there is a clear difference of monetary policy stance. So these reflect, these are translated to the depreciation. So it can be said that it is based on the fundamentals, but at the same time, it can be overshooting. So there is no reason that it should be like 135 or 140, even if these are the reasons, and it can be coming back in the future.
Nakao-san, how do you see the BOJ and the Finance Ministry coordinating now to deal with this weaker yen, and what sort of measures should be taken this time around?
It's very clear from Mr. Kuroda's comment that the BOJ is still looking at the deflationary pressures, and especially when yen is depreciated, or they say that yen is not the target. And also, they are still worried about the deflationary pressures on the wages and also the economic activities. So they wouldn't change the monetary policy, including yield curve control. But I think yield curve control and the very expansionary policies was good in 2013 and after the global financial crisis, of course. But by continuing that, there are many negative elements. But I don't know what to do. Negative elements include, once again, yen's depreciations, and also the government bond is easy to issue, and it can be financing the too much debt to the government, and discipline is being lost, and also the spread is smaller, so financial intermediation is difficult, and also the market functions of a long-term interest rate is lost. So there are many negative elements, but I think it's very difficult for the BOJ to change it. Yeah.
Nakao-san, okay, I mean, there have been many stop-start reforms Japanese economy over the years, and we've got Prime Minister Kishida out of the moment with the new capitalism and economic and financial management reforms. What do you think needs to be done? What would be on your agenda, top of your list?
I think the Japanese economy should take advantage of many seeds of income or the profit. There are many good products and services which can be sold at higher prices, but the Japanese companies tend to try to sell the good quality service and goods at lower prices, reasonable price, but it is a mistake. We should try to sell our product at a higher price. And I think it's better to avoid too much dependence on the policy of the government. It's not a good idea to continue to issue large bond to fill the gap of demand and supply or production gap, because it, in a sense, causes the private sector's demand decrease based on the more increase of public debt and public spending. So what we should do is to pursue the efforts of companies so that they can take a more value added by the market, in the market. I think, generally speaking, what the government can do is more limited, yeah.
Nakao-san, then I have to ask you, if this weaker yen continues and the BOJ continues on this dovish stance, how is this going to impact currency markets and your chance, or how are you putting a coordinated intervention? Is that a likelihood at this point to try to stem the declines?
Yeah, the coordinated intervention generally is very difficult unless there is a very kind of excessive movement of the market or the kind of crisis mode. But otherwise, I don't think it's easy to get a coordinated intervention. But the unilateral intervention can be still shouldn't be eliminated as a possibility. I don't know what the authorities are now thinking, but when I was a vice minister, I intervened in the market by $170 billion purchase or 13 trillion yen selling, and it was like 78 yen per dollar. So it was a huge gain of capital gains by that intervention. So at this moment, many people say it's very difficult to intervene in the market, partly because of American inflation, and they don't like the weaker, stronger yen or weaker dollar. But the U.S. import of Japanese goods is just 5% of the import, and they generally don't like the yen's weaker yen or currency war type things more than the stronger yen. So the foreign reserve is generally held for prevent the excessive speculative movement. So we shouldn't eliminate the possibility of the intervention. That is my general comment.